Whoa, whoa. Miss Trade, Matt Davio, HFR, Robert Heffernan, Market Vitals, the show, marketvitals.io, our portal to honesty in trading. Good morning, Matt.
Morning, Bobby. How are you?
Ah, baby, I feel good. I feel good. Matt, you know, we share a lot of music with each other, both giant music fans, like most people, you know, and the shit show that we find ourselves in modern day society, for me, usually can get tempered by fantastic musical talent that is either long gone, like you never even knew them, like how did I miss these guys, and or guys that are just killing it right now, and gals, by the way, guys and gals. Music, man, it's our. I got to tell you, for pop culture, it was really the thread that changed society through the 50s, 60s, 70s, 80s, 90s, and for me, it's the one thing that I constantly find hope in is great musical talent that is produced by this country and you know, by the world. Let's face it.
By the world, yeah. By no means just a U.S. thing. Right. Matter of fact, I was listening to this guy yesterday, Brooklyn-based British artist, and his name is Tom Freeman, but he goes by Covey. And it was such a cool song.
Covey?
Covey. Yeah.
You should change that name right now. Sounds too much like COVID.
Right. It's just, but he's got a cool sound. Anyways, you know, it's interesting. I'm just reading about kind of how he got his followers, but you might want to check him out. Covey.
Find him on
Spotify.
Spotify.
And you can catch him. Looks like he's touring tonight in Pittsburgh. He's playing also in Detroit on Saturday. That would be a good show. Columbus. He's doing a Midwest. He's playing at the Bottom Lounge in Chicago.
And let me ask you a question. What type of music are we talking with Covey?
You know, kind of pop. You know, I don't know, new pop. I don't know what you call it. He's also playing he's playing at the Aladdin at the end of this month. Maybe we'll have to go see him up in, or we can go see him in San Diego at the House of Blues on November 4th. So he's got some tour dates coming out. Check him out, Covey. That's my music du jour.
And why can't I find the one that I shared with you? I can't remember the name of the band.
Oh gosh, you shared with me
hard rock band. Yeah, just great. AC/DC.
No, I think it was Axl Rose, Sammy Hagar combination. Personally, that's kind of where I put him into. That one's he's got a couple songs. He sounded just like Axl Rose, actually.
We're gonna get back to that. We'll post it in the marketvitals.io into the chat. Matt, last night. Congressional baseball game.
Dirty Honey was the name of that band.
What is it?
Dirty Honey.
Dirty Honey. Check out Dirty Honey. If you like hard rock, check out Dirty Honey at Spotify. Phenomenal. And here's our dirty president, Joe Biden. President Joe Biden with his cabinet going to the baseball game. But man, I wanted to share because you don't see this very often. And I don't know if anybody saw it, but the dinger, let me go full screen here and show a congressman, Republican congressman. Nice stance in the box, by the way, Matt.
Yeah, he's obviously played a little.
He's obviously played a little bit of baseball because that is call it what it is. That is a major league setup right there.
Yeah.
He is ready.
He's ready. Oh.
And that is the congressman.
He drilled that thing.
First dinger in a congressional game
ever
since I think 40 years ago somebody did it.
Wow.
And out. Anyway, awesome stuff. All right, Matt.
Who won the game?
Republicans. Republicans won 13-12.
Wow.
Showing
close one. Pitching.
And there was some other great stuff, right? Joe Biden comes in and he gets booed relentlessly. Not like that's anything new with the president, right? And baseball, again, like music, one thing that maybe
yeah, but the thing about being booed by your own, I mean, who else? Nobody was paying to go see fucking congressional members. It was just their family members and friends, right, going to watch them. So that's not a good indication that your frontline employees don't like you.
All right, man, let's talk some prices. Monopoly. I did not know this, by the way. That Monopoly, there is a rule 11 in Monopoly. Some players think the bank is bankrupt if it runs out of money. The bank never runs out of money. The bank never goes bankrupt. All right, to continue playing, just use slips of paper.
Yeah.
Keep track of it the best as you can until the bank has enough paper money to operate again. Seems kind of like the times that we're in, and it seems a lot of people don't think there's any consequences for $3 trillion.
3.5 trillion, but who's counting?
3.5 trillion, right? But then I saw this quote from Pop. Dollar Tree cannot continue to charge $1 per item because $1 just isn't what it used to be. They're raising many things in the store to more than $1. I responded, just let's save them some time, like save the edits. Just change your name right now. People, seriously, if it's Dollar Tree or if it's $5 Tree.
Or you should at least be the $2 bill store now.
Bring back $2 Chuck. $2 bills. All right, man, let's look at the bonds. We don't have payrolls tomorrow because it's the first Friday, the first of the month landing on a Friday. Payrolls are next Friday, October 8th, my birthday. So this week seems to me like it's just kind of petering out a little bit.
Well, there's a lot of news, right? You got the 3.5 trillion that no way is going to get done, and you know he's promising today, and I don't know. I watch this market, Bob, and it just feels like it's scared. It's here's the mode. We close lower most days. This is Thursday. We basically have opened up a little higher, and then, or rather, we went up overnight every day this week. So Asia would buy, Europe would buy, and then they'd crush them starting, midday Europe or a couple hours in. And that's been the case all day. I mean, if you left some orders out there in the SPOOs last night, 74 to 88, you filled, and we're trading at 40 again. So it only goes up right now, and we're trading 43.29, low of the day here. So on the SPOOs, they're breaking again. So they're down, 55, almost 60 points from the high overnight. And if you were sleeping or didn't have an order and you missed it, but believe it or not, they traded up to, I think, 88, 89 yesterday. And they're all the way back down here, 43.28 as we speak. Bonds are not doing much. This is, like I said to you before we came on, this is not a day trading market for me today. There's not a lot of great things going on volatility wise. And it really feels like people are pausing big time, and for just reasons. I think a lot of people do think the jobs is coming out tomorrow, but it's not until next week. But the job report that we had today, unemployment claims were up for the third week in a row, not significantly, but we're if you look on the chart, we're making a little bottom there as we come into the winter, fall and winter season with all this inflationary measures. But the bonds really aren't doing much. They're not leading, or as they have been. I've been very vocal about that all week. The bonds were kind of doing the opposite of what the rest of the market was. Today they're just kind of sitting there, and they've been very volatile. And there's been big volume, by the way, in the ZB. I think I want to say the contracts have been much bigger than they have been over time. But, I'm going to bring up just a picture of a little longer term chart of the bonds, Bob, so you can see it. But basically, we went from a high here in the summer of 167, and we're back here to 159.09 right now. And this is kind of there's a battle at this area. And if you're wondering why, it's because this is where we broke out from. So that 159 needs to hold. The bonds are probably the most responsive and respectful markets. It's thick. I mean, there's
for sure. I mean, the most money in the world is traded in the bonds.
Right. And I don't think people understand that. And so if we can impart any wisdom today, Bob, I would say, even if you don't trade the bonds, follow them and get an understanding of how the rest of the market behaves typically. And there is a typical reaction, right? Bonds go up. That means interest rates are going down. That means, the stock market should go up. And now that's at a basis where we're as close to zero as we can get. So it's less meaningful. But when bonds start going down, as they did last year, and again here after this bounce, right? We had kind of a dead cat bounce. You've got to start asking yourself, and again, where are we going to, where are these things going? Are they going to, I still think, regardless of what the Fed and their taper talk is, we've got to see higher interest rates to squelch some of this inflation that's already taking over in our world. So again, the Fed is not in a pretty place. They've painted themselves into a corner, and this is a difficult situation. But
now, when you fractaled out there a little bit more, where's that low of the profile now? Because that seems to be more realistic.
What do you mean?
Well, you just fractaled out, and as you fractal, there's more price discovery. It changes the profile, right?
Correct.
I mean, and that's pretty straightforward.
Yeah. So I was looking at a long-term chart. This is a little close. This is kind of where we started. And yeah, as I said, we're kind of sitting here in this chunk here down to say 154. That needs to hold to be
there.
bullish.
We go. That's what I was looking for. Yeah.
Yeah.
And the triple Galaga too on this one.
The triple Galaga, it's not a very bullish chart. I can tell you that much. This is not a bullish chart. It's heavy interest in selling at a lot of, at the level we were just at. And if we talked about this before, it had a potential to get up here to 170s, but we're not there, and we didn't even get over 167. So now we're at this breakout zone. So this is where the battle is, and which way it's going to resolve, I don't know. And again, 154 kind of comes into play if it can't hold here at 159. So just be aware of those numbers. That's kind of in my opinion, the big numbers here. And then on the reverse side, if we can get back above 161, maybe we can go test that underbelly again. This has been a pretty serious sell-off the last 2 weeks or so. So
right on.
It's been significant.
All right, Matt. We're
a lot of volume
Detroit.
Too. A lot of volume, Bob.
Hold on. $5 tree gone. We're moving to Detroit. It's so hot right now, right? Everybody's moving to Detroit. You can buy a whole block. They've knocked all the houses down. You can put your own house. I wouldn't be surprised if you see some stuff like that, where people just start buying the block, move their whole family, build 10 houses, becomes your little enclave.
Yeah.
M&M opening a restaurant that is going to be a stoner's delight, Matt. Seems to me. You told me it's a stoner's delight. I believe in you, but some of the menu items.
It's the spaghetti you make out of a jar, and the thin spaghetti, and they put it on toast. Come on, Bob. What else are you going to call that? Watch the video.
How high do you got to be? Speaking of Vax cards, they're going to test how high you are in order to get in the restaurant.
Right. You cannot go to M&M's place unless you have a marijuana card, a medical marijuana.
You need a blunt, and if they don't think you're high enough, you got to pull a tube. Hold on a second. You got to pull a tube, and then they'll let you in for the spaghetti on French fries. All right, Matt. We only do that because we've been arguing about this. Mr. Timeout himself, Chris Weber, give me a TO. I'm sorry, Chris, you don't have any timeouts. And my immediate thought was, and I've said this for the duration, Matt, my opinion has been, you can grow so much weed yourself. I don't see how this ever becomes just, and a lot of people don't, I get that. But the timing here seems to be a $50 million cannabis facility in Detroit when prices are, you can buy here in Oregon, you can buy a 1/4 ounce of Primo bud. I saw this on the coast. It's not true here in Bend, but on the coast, it was $25 for a 1/4. That used to be $125, $150 item. I heard that somewhere that's how much it cost back in the day. Anyway, and we've been looking at the cannabis stocks several times, Matt, and they've been schmees. So I don't know. I wish him well, and I think a fully integrated model is the only way to go. But
just because he's opening a $50 million cannabis facility doesn't mean it's his money, right? So it's levered money. It's coming from probably a group of investors. His name's on it because Robert Heffernan doesn't mean anything to anybody else, and your money in there.
Former General Motors factory at 22nd and Michigan Avenue.
Yeah, I know
Are
where
you
that is.
familiar with the area?
I am, but that's not really.
Shithole.
That's kind of like I mean, that's Detroit, but there's nothing going on there for sure. So it's a smart business move because they're picking up a empty core of a building that probably nobody else would buy. So and it's it's empty. All you got to do is put some grow. I mean, you've been in these grows. It's nothing but hanging lights and
and water.
And
Pretty
water.
simple. Right on.
So
well, let's look at a few cannabis stocks, and because if I didn't think they were going to zero, it would be my second bet that they were going to zero.
Well, let's just look at the big ones. We haven't talked about Canopy in a while, but again, I think what you're seeing here, there's a number of things that is going on. We had this huge rally, and I think the market thought that if Trump won again, a lot of things would get done. And then we basically peaked on February 11th when they realized Biden was in the White House and nothing was going to happen.
I'm not sure it has anything to do with.
No, I think it all has to do with federal legislation. Because think about it. Have you heard any talk about federal banking anymore? It's been pushed so far. Like, it's obviously not in that $3.5 trillion infrastructure bill.
That is true.
Otherwise, these stocks would be running. So the government that's in play right now has no interest in doing anything but talk about COVID. And I mean, that's very clear. We're going
to run out of that story here soon. I will share.
But this is where we are. Like, they're not helping any of these, fledgling type businesses that could use, some assistance on the banking side. Still, nothing's changed, right? This still is a problem. And so, because it's legal, not legal in a lot of states, still, it's a funky world to operate in. And it's difficult, but in the states where you can make an investment like that, in Michigan, where it's legalized now, it probably does make sense, because if you can control the layers of, build out and everything, it probably is a good time. I would say, this is a good time for Chris and his group to put together $50 million, because things are cheaper today than they sure were in February.
Well, now, that's for sure. I mean,
if he was doing this in February, we'd be laughing our asses off. So right. I'll actually tip the hat and say, Chris, time out. Maybe you're doing it right. You got some good business decisions going out there.
And if you're just trading, we were talking about this on the way in. It's a great place to pick it up if you want cannabis. Any of these stocks, by the way, if you want exposure to the space, they surely have. And again,
I'm not. But I'm by no means on top of the what's going on in the legislative world, but I just know it's not on the front pages anymore. So you're going to have to dig. You're going to have to go follow guys like Todd Harrison, who runs a cannabis fund. He's got a lot of great information that he provides on his website, and their company. He's a former. He ran Kramer's Money. So Todd's running this cannabis fund, and if you want, he writes some great stuff daily. He's got a blog. Follow him. You'll figure out some stuff there. But Compass is the mushroom company, the only one that's publicly traded that we talked about before. And this, I think last time we talked about it was somewhere in in the summer months, and it was flatline. And we said, as long as 36, 35 holds, which it didn't, and now we're down another $7. So it's down here at 29, and it came public here back in September a year ago. So 1 year, this really hasn't done much. And again, I think this speaks volumes to kind of legislation and the lack of in this area. And until that gets put on the front burner, this isn't going to change. And I'm not saying it's going to zero like you. There's definitely a lot of junky stocks, but CGC, this one, Tilray, these are the names that, to your point, if you want to buy them, this would be the time to step in and buy some of these names, because they've been, hammered and just slow bleed out, basically.
Absolutely.
People that bought them here and they bought them here, they're like, fuck, I bought it here when it looked like it was breaking out at 20 and now it's 11. Well, this is what happens in these, when there's no reason for fresh capital to come in and chase. And so when that happens, this sector is just dead. It's dead until something comes on. But for the long term, I still think, Tilray's got opportunities in the pharma side, possibly, but $11, $5 billion market cap, still not small for a company that doesn't do anything.
That is a giant number to swallow.
Yeah. So, It's
And
tricky.
when you
But
just throw 3 trillion around, like, hey, it's just a 3 trillion. Like, hey, what are you
well,
talking?
you know, in that world, it's 3 pages. You know, in the government world, it's 3 pages of a 2,500 page document, 1.5 billion a page. So yeah, just insane.
That's our new metric on market cap.
I love it.
How many?
It's the best.
How many pages of the infrastructure bill is the market cap
of the company
of a giant company?
Yeah.
That's crazy. All right,
Just
man.
to
Let me
get-
share one thing. We got a guest coming on here momentarily. Patrick Rooney, the famed Patrick Rooney. But I want to share something here that Ben Shapiro shared because there's so much, they keep trying with the hysteria, right? And this is a great little site, COVID, ESTIM.org. It's from Stanford University, I believe. But you look at this map of the US of A, Matt, and the black region is 0.6. There's Patrick, 0.6 on the scale. Let's welcome Patrick in, and I'll come back to this. And I'll come back to this post. Anyway, what it's trying to show is there we go. We're bringing him in. There he is. Give me a hello, Patrick. Can you hear us, Patrick? He doesn't look like he can hear us.
I don't hear anything.
He doesn't hear anything. See, technology, man. It's a mother joner. Your headphones, Patrick.
We can hear him. I wonder why he can't.
Yeah,
hear
we
us.
can hear you. New headphones. That's right. Bring in the A team. How about now?
All right. Yeah, I can hear you now.
Yeah, wrong headphones on.
Yeah, I've been recording stuff all morning, so I keep going back from
Fantastic.
mics all over the place.
Patrick Rooney, we've been talking about so much here. Love to hear your input. First of all, I see people introduce people all the time. I'm kind of a fan of let somebody introduce themselves. Patrick, tell us a little bit about yourself.
Sir, my name's Patrick Rooney. I'm product marketing manager at TT. I was the product manager for a while. I've been on the marketing side now for about 6 years. Been at TT for 15 years. Prior to that, I started off on the floor running paper on the meats back in 1991. I kind of went from there. I moved upstairs and traded upstairs for fun for several years, and then made my way to TT, like I said, about 16 years ago.
All right, beautiful. You know what I love about
TT for people that aren't in the business is Trading Technologies, which is a software company. How would you describe your niche in the space, Patrick?
Our niche is primarily it's divested a little bit, but it's primarily blue chip. It's primarily, the hedge funds use us, the leading hedge funds, the talking heads you see in CNBC, they use us, the leading prop shops use us. But we do have a substantial footprint in the retail space as well, because we do have a couple different tiers of pricing in the platform. But TT has been around for about 25 years, and TT what it was really known for. One is ND Trader, whatever refers to as the DOM, depth of market trader. That kind of came out of TT. It came out of Harris Brumfeld. He kind of invented that many years ago, and that kind of changed the electronic trading space a great deal. That's what kind of helped a lot of floor traders move upstairs because they understood the DOM a little bit. It looked a little bit more, prices moved on a DOM a little bit more, or NB Trader a little more closely, or a little bit more intuitively to the way traders in the pits would visualize the markets. And added some other security checks to it, where there's a stable DOM, prices didn't move and things like that. But that made a big thing. And then TT kind of moved on, did some other big things they added along the time that changed the space a little bit, like the auto spreader. The first really come out with a strong auto spreader, so you could trade contracts at ICE and CME and spread at the same time. And we built up ADL, which is a DIY algo development tool, so non-coders can build algos and order types. And those are the types of things that have kept me busy and TT busy over the last several years.
Right on.
See, now, if I were new to this business, when I hear stuff like this, I'd be like, holy shit, are the cards stacked against me or what? Right? Coming in as a trader.
Yeah.
When you start thinking about people using tools like this and how they operate,
Yeah. I'd say a couple things about that. One, I think we actually kind of leveled the playing field because our retail customers, anyone can go in and get the CT platform, and they're getting the exact same software, the exact same infrastructure that the leading hedge funds get, that the investment banks get. Anyone can plug into it. Anyone can get it. It's totally wide open. So I can't mention names, but I mean, you know who the big future
Yeah.
hedge funds are in the world and stuff like that. You get the exact same front end, the exact same back end. Because one thing we do with the TG platform, when we launched about 6 years ago, is we control the entire infrastructure now as well. So instead of you having to set up your own little routing to the exchanges and things like that, we do that now all TD. We support all those servers, we support all the connectivity. So you get the exact same staff, the exact same suite of servers, the exact same co-located proximity to the exchange matching engine that all the big talking heads on CNBC gets.
All right, Patrick, we were talking as we came in, and maybe this would be a good segue because we were talking about this map that I brought up that Ben Shapiro shared, and it's basically the COVID positivity around the country, the effective reproduction number. Let me share it again.
Sure.
Because I think the story here, and I'd hate to be, I don't want to be the wrong one, but what this is showing is that COVID is drastically going away in this country against the narrative that they want to. I mean, it doesn't matter where it is in the country where cases are spiking. That's where all the news goes to. No news has been in Florida, Mississippi.
Yeah.
And my point is that, and I've actually been thinking about this, that it was Trump, the narrative, Trump. It's been COVID now for nearly 2 years, hysteria. If COVID goes away, this is a toss-up question, Matt, you can chime in too. COVID goes away, what's the next, thing that is going to drive narratives that we all have to be completely enraged about and at each other's throats? I don't know. It's a crazy world, but that's kind of what I'm thinking. Like, what's next? Because if this goes away rapidly, and it very well could, as viruses sometimes do, like what's next?
I think there's a lot of narratives that are picked up, and I think one of them that I've been talking to people about is kind of the frustration that a lot of the infrastructure didn't switch, didn't move. Remember when this really started to sprout up a year and a half, 2 years ago? There was a lot of talk of, well, why don't we get all this manufacturing out of China? If China's a problem, why don't we move it to Mexico? Why don't we move it to Guatemala? Why don't we move it to South America? We can get a lot of this stuff done. I don't think much of that actually happened, and I think that's it's a frustrating narrative as China continues to close down and shut down, and I think that's gonna go on and continue to be a problem. I think people are gonna be frustrated that we hear the term infrastructure being thrown around now. We're building the infrastructure, but I don't think the moves that really needed to free us of a lot of the albatross that's around our necks right now were really made. So I think that's going to be a big thing. Obviously, the debt's gonna be a big thing, and central bank digital currency are gonna be good things. But why don't you go ahead, Matt? What do you got to say?
No, I think that's spot on. I think it's interesting, when like you think back to Trump, he was like the only one talking about we need to bring more manufacturing back. And this infrastructure bill in its essence has nothing to do with China. It has nothing to do with that type of infrastructure. So just using that word is, to me, it's like using the word science anymore. It's like doesn't carry much it doesn't carry much panache, and it's just noise, whether it's infrastructure or science. Like when I hear those used politically, I just turn it right off because it's garbage. It's pure garbage. But that being said, I'm curious your thoughts. The volumes that we're seeing now in the overall futures markets, are they? What are we looking at now compared to pre-COVID? Because when we look at equities, I can tell you that obviously the volumes are much higher and there's a lot more activity. What does it look like during this past couple of years, and then comparing it to maybe the 2 years prior on the future side of things, and what you guys have seen on the business side?
Yeah, there's been a big pivot. If people don't know, I mean TT kind of is the big dog in futures, where a very large proportion of global futures volume goes through our platform. So we know where it's all going, where it's kind of flowing around. And between that and the numbers you can pull from FIA, you kind of see where the trends are going right now. And it has been very fascinating. One thing that's been very interesting is a lot of volume is moving into options, going from futures to options, which is kind of interesting. Why that's happening, I think there's a lot of reasons too, but I won't get into detail. Secondly, diversity has really picked up quite a bit as far as where the volume is going. If you look at Brazil, look at B3, the volume that's going down in Brazil's B3 blows you away. I was shocked when I looked at it recently to see just how much volume is actually being done down in Brazil at B3. That is a massive exchange, it is quickly catching up to the other big global exchanges. The volume is also happening in China, which only just went internationalized, like 9 months ago, something like that, is impressive. It's very impressive. And that's a very exciting market to get into because it's a very unsophisticated market, I guess you could say, to a certain extent, where it is very retail driven. It's a lot of people walking around trading on their cell phone, mom and pop, who are, putting orders in here and there, but it's it's scaled tremendously, massively. So you got a huge amount of people out there. So it's a huge amount of retail traders that haven't really seen professional trading really in its niche or in its really prime. And we had, I know at TT and other ISVs, we've gotten more people over there recently. We're trading those markets, and it's like, it's a great experience because you've got a lot of natural hedges. I mean, the international contracts that are available include crude, fuel oil, PTA, which is a derivative of crude, which is kind of like the plastic you see in bottles and stuff like that. It's polyester, and you've got palm oil futures, and you got copper. But it's a very different market. They don't like automated trading there too much, although they're very inquisitive about it. They're asking a lot of questions about that, so I want to get into that. But they do have a lot of rules based around that to keep you out from doing any type of aggressive quoting and things like that. But still, the traders that are connected over there are doing quite well with it because there's a lot of natural spreading. There's a lot of natural spreads between SGX for one exchange, a lot of natural spreading even to ICE and to CME for crude products. It's a very interesting market. It's a very fascinating market. And the volume there, if you look at the top 10 volume contracts in the world, you're going to see China, you're going to see Brazil. Brazil's got like 3 of them. They've got a Ibovespa futures contract, the mini Ibovespa futures contract, which will do like 23, 24, 25 million contracts in a day.
Whoa.
They have a mini dollar index contract that does about the same. That does also huge volume. It's a mini dollar index, so it's only like $10,000, something like that. But it's used very aggressively because you look at the natural dynamics between the U.S., Brazil, and China. There's a 3-way trade there that's enormous because obviously China is a big buyer of agriculturals from both U.S. and Brazil.
Right.
A lot of the differentiator there between where they're going to buy those grains from happens to be the dollar real exchange rate. So that contract is a huge driver of global commerce. Dollar real, because obviously, if the dollar's expensive, they're going to buy in Brazil. If dollar's cheap, they're going to buy in the United States. So it's a big deal, and it's a very fascinating, interesting 3-way trade there between Brazil, the United States, and China.
I wonder.
Let me ask you a question that because that gets my head spinning. So with the dollar breaking out to new highs, how does that affect this trifecta of as you said, trade partners with China, Brazil, and the U.S.? Is that moving more money to the U.S. today, or is it moving more money to Brazil, China? How does that look?
It's the dollar break is going to be a problem. And I've written about this and talked a little bit about it too. The dollar breakout, I do think the dollar is going to continue to break out. I think the dollar index is up around 94 something, 94 change right now.
Yeah, 94.5 it hit today, new high again.
Yeah, and that's going to be, everyone's talking about this commodity super cycle. Commodity super cycle is not going to happen with the dollar appreciating. I'm sorry. But grains can continue to rally. And we've seen that a little bit where, corn's topped off. A lot of the grains have topped off a little bit because when you see the dollar rallying, it obviously hurts our leverage there a little bit. And you pull up a chart of corn Brazil, CCM is the index code. And you look at that and you see the differential. I mean, and I talked to a lot of people in Brazil too. Yeah, they get a lot more interest down there, obviously, when the dollar is getting stronger because it's as simple as that. It's cheaper. Mm-hmm. I'm pretty sure transportation's got to be cheaper from Brazil than the United States to China as well. Although I'm not real sure about that. I don't know about that part. But as far as the raw spot price, yeah, obviously a stronger dollar hurts our trade to China a great deal. So that's that'll be an interesting thing to watch out as we go into the next 6 months. If the dollar appreciate,
I'm wondering too, Patrick.
That's going to keep us.
Patrick's freezing up. There he is. I'm wondering. I'm wondering how much that because this has obviously been an evolution over the last 10 years or so.
By the way,
How
they're breaking them hard here. The SPOOs are almost at 4,300. They just since we've come on, they've gone down about 40 points. No, I'm sorry, 55 points, because we were at 55 when we started this just a half hour ago. So I'm just bringing that up as I'm watching this, guys. Right
on. I'm wondering, Patrick, obviously this is developed over the last couple of decades, how much that impinges Brazil, because I actually have some history here. I was in the Mexican peso pit when Brazil devalued in 99, and thanks be to God, it was a great day. But I wonder, as this has increased, this trade, like how much does it curtail Brazil's central bank to be able to pull a move like that? Like they, you know, in 90, the playing field is completely different now than it was in 99. You can't just say I'm going to devalue the currency. Like, so this is intriguing to me on the volume that this trade is doing.
Yeah, and you look at the rate differentials, and you look at the DI1 contract. DI1 is also one of the top 10 or 20 products traded in the world in the future space, and that's the one-day overnight futures contract of Brazil's B3. That just keeps going higher, higher. Their rates, where are they at right now? Put up real quick. But the DI1, kind of like the DI1 too, because it trades inversely to rate 2 in the US. So what you see is what the rate actually is. And I'm seeing it right now where it's actually at. But they're rallying, and rates are rallying. Rates been rallying in Brazil for quite some time, as opposed to here in the States where they're still remaining relatively flat and starting to rally a little bit. But they've got off to a serious head start over there. So I think that's definitely got an effect in there. Is going to start taking the real a little bit higher, but that's a wild trade. And that currency, that currency is not unusual, and it's a fun one to keep an eye on and actually get in there and play out. It's on CME. I think the symbol is 60.
What is it again? CME 6.
CME is. Oh no, I'm sorry. 6L. 6L is Brazilian real.
Okay, cool. I'll start looking at it.
6Z is another commodity one. Actually, that's South Africa. That's
all right, Patrick. Well, you seem to be breaking up a bunch here. I really appreciate you spending some time with us.
Sure. All right. Sorry about that. My internet's breaking up, but hope you guys
no
have
worries.
a good day.
No worries. Patrick Roney with Trading Technologies, cutting edge, and been cutting edge for several decades now in the trader space. As a longtime spreader, I appreciate what you guys do.
I appreciate that. Thank you very much.
Right on, Patrick. Thank you.
All right. Take care, guys. Bye.
See ya. All right, Matt. Brazilian real. Maybe we should start looking at the Brazilian real, dude.
I got enough going on in my play right
now. Don't get me going. Come on, we can fly down to Rio.
Yeah, well, I got enough going on right now.
It's summertime in Rio. We're coming into spring right now in Rio, dude.
It's just about to be. No
golf courses or the sprinklers are just starting to hit.
I'll go to Buenos Aires with you. How's that?
Argentina.
I'll go to Buenos Aires.
All right, Matt. That was a fantastic show. We covered so much.
It's interesting. It's interesting. The Nasdaq's only down 50 for the day, but it made a new low here. And same with, the full round trip on the Y2K, I call it, the Russell. And the Russell, I'll bring up a chart real quick because, it wasn't that long ago. I was perplexed by this slow death 10, 11% March that we had again. That was in late August on the Russell. And that went from 2,100 all the way up to 23. And now, we're back to the middle. We've had
bring it up. We don't see it.
I will.
Oh, sorry.
We've had a couple bounces, but this thing has been, the same picture that we've talked about. The Russell has not moved the entire year. And we've talked about this nonstop. But when this breaks, when this bracket of 2,100 and 2,300 breaks, Bob, and we've talked about this, is 250 points. we're going to see another 10% move. And my guess is it'll be to the downside. But until that happens, I'm just making a guess.
Yeah, we're just playing ping pong now. It's beautiful.
We've been playing ping pong, and this has been to me, I think the best picture of what's going on in the world, which, these are the smaller companies that trade publicly in the US, 2,000 of them. And again, there's not a lot of stories and themes that you can get, because you can usually pick that up from the Russell 2K, right? Some maybe up and coming industries, whether it's, these battery companies, and that we know that fizzled out on the NASDAQ side, but this is, to me, the most interesting story still. This is the most interesting, component in the market space. So watching this go down again here, 2,200, we rallied all the way to 23 again. Like, we keep doing this, and each one gets softer and softer. Now we're not breaking either. So you got to be careful.
What is the low end of that meat of that profile?
2,100 down here.
2,100.
Yeah. Right. But we're right in the middle. And again, we're falling below, this is 2230. And today we were above it. We opened at 2250, and now we're at 2,200. So it's a violent market right now. And I just, want everybody to kind of watch what, I'm watching. I'm watching the bonds. I'm watching the SPOOs. I'm watching the NASDAQ, of course. But and then Europe is totally, we're wagging the tail there. So whatever's happened, Europe and Asia are not leading us. And just want to point that out, that we're in this really interesting section, and I think a lot of new prices are going to play themselves out here, I think, between now and Thanksgiving. So again, I would not be surprised to see 4,100 to 4,250 on the SPOOs, and we're at 4,200, or excuse me, 4,300 basically right now. So we could go a lot lower, but we're also going to see some violent bear rallies during this. So just be aware that you get some big upside moves in these indices, especially in the futures, when you're in these cycles of kind of rotating.
Hey, Matt, is anybody calling it a bear market yet?
Well, technically, it's not a bear market until you're down 20%. So no.
Yeah, well, you miss a lot of the bear market if you're waiting to call it a bear market.
I agree, but that's
because we brought up those pot stocks, and I didn't get a chance to say, but those pot stocks, have fully exposed the right side of the parabola.
Yep.
I mean, fully, and this happens time and again in trading. It doesn't matter what the issue is. There's parabolic moves. There's a chart that's like the Russell that you just showed that has been dead sideways for a year.
Yeah.
And then there's right side of parabolas. And
well, I mean, a good one to look at is, we looked at a few of these, but Microsoft, right? I mean, Microsoft doesn't move like this. This is a $2 trillion. This and Apple are the largest trading companies in America. And look at this thing. This thing, from first of the year, you could have picked it up at $200 and it went to $300. Why? 50% move in 9 months. I mean, and it was a slow march up, and it's because of all this money that's just been sloshing around in the system. The reverse repos have a part in all this. There's so much money that has to be put to work because the banks aren't getting, they don't want you to borrow money from them right now because there's no interest. So they're putting it to work, and it's a weird world. But you start to see, to your point, Bob, I mean, this has been rolling over now for a couple of weeks and nobody's talking about it. But $20, it took a long time, for this to kind of, to play out, and it rectifies itself much more quickly. So
yeah, again, that one looking like a giant. There's a lot of time and a lot of price discovery. Just
right the top now of value on this, 2-year chart takes you, to 250, and that's another $30 from here, and we're off $25. So that's halfway to just getting into kind of rational zone prices. And ultimately 214 is kind of, and it's even lower if you look at the longer time frames. You look at a daily chart. I mean, it's just, wow. Again, here's your low from COVID, $135. I mean, 2.5 bagger. Did the world get that much better? Are there that many more computers being sold during this time? I don't think so, but it's just money chasing anything it can right now. And these guys pay a 0.87% dividend.
Dude, stick with the cigarette companies,
Right?
Right.
Yeah, if you want a dividend, this
versus
is not. Yeah,
crazy.
The risk in buying Microsoft at $282 a share, to your point, is off the hook. It's not the time to buy Microsoft. You missed it if you didn't buy.
Man, I'm calling it. We're in a bear market. HFR calls it bear market.
Well, and again, I don't think the big sell-off comes for a while yet. I don't think it's this year. We may see 10% is kind of like, if we could see a 10% correction, that would be healthy. That would be a start, and we're not there. I mean, 10% on the SPOOs takes you down to 4,100, Bob. So you got a while to go.
Matt, I called it. We're in a bear market.
Okay.
HFR. Timestamp, and you can
November
print it.
30th, Heffernan calls a bear market. I'm not quite ready yet.
All right, Matt. Hey, Lee, thanks for joining us. The meeting started an hour ago. Anyway. Anyway, it's
Lee,
nice.
Lee's slacking again.
Matt, let me recap.
Lee knows we kid.
Let me recap the show, Matt. Let me recap the show. Music, Dirty Honey and Covey.
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 EY.
Covey, not COVID. Covey. Dirty Honey and Covey are musical. We're pumping them up. Congressional baseball game. Republicans do what they do, right? Joe Biden booed furiously at the game. Incredible major league style dinger from one of the Republican representatives, Matt. Cannabis stocks on their ass. M&M opening a restaurant where your stoner card is
where Chris Weber's customers will be attending.
Right. Chris Weber opened a cannabis grow in Detroit. Detroit is so hot right now. We're all moving to Detroit. Let's start rebuilding Detroit.
Bob wants to move back to 5 Mile or 6 Mile. And
no, dude. I want to get right down where let's start making music. Let's start making music downtown.
Downtown.
All right.
There's nothing downtown.
Great place to pick up cannabis stocks here on the lows. Not sure that it makes any sense to me. You can grow about 6 years worth of your personal supply with very little challenge in the cannabis space. And that's been my problem with it the whole time. If you can grow a tomato, you can grow 3 pounds of weed. I'm telling you that right now. And Patrick Rooney from TT joined us. Trading Technologies, great professional trading front end. Get the same stuff that the big guys use. That's powerful stuff to know.
Yep, it is.
And
it's a great platform.
HFR calls right side of a parabola on the stock market, bear market. Miss Trade says not so fast, young man. Lee joins the meeting late. That's all we got. Thank you so much. Please share the broadcast far and wide.
Hey, Bob, it's a trader. All I have to say is it is a trader's market. It is not a bullish or a bearish market.
Right. Investors are going to get fucked here.
It is a trader's market.
It is a trader's market. And I actually think that's the next story, Matt.
And we haven't had it. We haven't had it in a while, and I'm happy to be in one. And we've had it for basically 3 or 4 weeks. I don't know if it's going to continue.
Here's my thought on my quip to you guys, or my question. What's the next narrative? Yeah. Right? It was Trump, and then it was COVID.
Well, it's still all, orange man bad. That's all.
Well, here, my thing is like, when a wheel starts coming off, it wobbles, right? Yeah. And then when it goes, it just like flies off into a million places, right?
Yeah.
My thought is it's going to be hard to have one narrative, right? Because there's so much that's going on.
Yeah.
And so much is in flux. My thought is mainstream media is going to have a hard time pounding the drum on any one thing because there's going to be so much to talk about.
Yeah, that's fair. That's a fair assessment. I think chaos is going to reign. How's that?
Chaos futures. Let's we need a chaos index that we can start trading.
Chaos is going to reign right now, Bobby.
All right, pal. You have a great day. Thank you, Matt. Thank you, Lee. Thank you, Patrick Rooney. Again, marketmetals.io is the site. Join us.